Hi, and welcome to the Real Estate Tokenization Part 2 webinar from Upside. Today we'll be discussing the emerging opportunities in financing and investing. My name is Ryan Morris. I'm the VP of Marketing at Upside, and today I'm joined by my colleague, Brian Wilson. He is the head legal engineer at Upside and is also the editor-in-chief of the MIT Computational Law Report. So today we're going to be doing a quick dive into who Upside is, and then we'll get to the meat of it and talk about the financial opportunity related to blockchain and real estate. We'll walk through kind of a simplified visual of real estate tokenization. We'll discuss the benefits of real estate tokenization, dive into some case studies, and then we'll discuss some emerging trends. So the introduction to Upside, who are we? Upside, as you can see from this slide, is a company with deep experience that has launched over $1 billion worth of tokens for enterprise level companies. And we were founded by Noah Thorpe, who has a deep background working for companies like NASDAQ Private Market, Apple, and Google Research. And at Upside, we specialize in launching security tokens and providing the tools to manage them. Primarily, that means that we have a digital assets platform where we can launch security tokens and then help the issuers manage them, as well as work with investors directly. And companies choose to work with us for a number of reasons, but we would say these are the top 5, and that we make it simple to manage token distributions. We are deeply focused on compliance and security. We have a long experience in the field, and gaining liquidity and access to it is a primary concern for almost all of our clients. The 3 pillars of Upside are kind of based around the platform I mentioned earlier, and that is the Upside operating system, which is a full lifecycle support for tokenizing assets, distributing them, and trading them, all while remaining compliant and under the proper regulatory frameworks. We also focus on the token issuers, those who are creating the tokens and issuing them, and the global investor network, which is, as it sounds, a network of investors, family offices, and investment banks that are often participating in the issuances of these tokens. And at Upside, we focus on the tokenization of real-world assets. We work with businesses to design, code, and deploy the smart contract for security token launches of specific real estate assets. Those assets could be physical in nature, digital, or even represent an economic interest. And now to discuss the financial opportunity of blockchain and real estate, I'm going to turn it over to Brian.
Hi. So where the past webinar focused on the technological innovation that blockchain enables, this webinar is going to be more focused on using the technology to respond to the market conditions facing those in the real estate industry right now. So innovations are only ever adopted when the market conditions are situated to that particular innovation. The market conditions right now for real estate favor the adoption of a very specific type of innovation. So interest rates are going up and there's a high rate of default on loans. Banks are not lending as much. And as a result, there's a lot of capital that is not being invested that's sitting there on the sidelines. So the specific type of innovation that could solve for some of these challenges should be able to do 2 things. First, it should be able to operate more efficiently so that it is easier to keep more returns and requires less to earn a profit. Second, it should open up the market to a larger group of investors able to invest in a larger number of deals. The tokenization of security interests is a specific type of innovation that is able to address some of these issues. So tokenized real estate is actually quite similar to traditional real estate finance. Additionally, however, there are some unique benefits and opportunities that are associated with tokenization that add new value to real estate finance. And I'll go over some of these. So first, real estate tokenization enables new opportunities for liquidity. Private placement deals typically have an illiquidity discount associated with them because it is so hard to resell those interests. Tokenization solves for this by providing marketplaces where this can happen, increasing the number of investors who are able to participate in a deal, increasing the ease with which investors can invest in multiple deals, and providing pathways for streamlined secondary trading options. Second, real estate tokenization makes financing arrangements more efficient through automated compliance. This is done by architecting transfer groups, transfer rules, and transfer restrictions for each type of issuance an issuer is looking to fill their round with. Real estate tokenizations also bring new access to the entire ecosystem of real estate financing. We are seeing firsthand at Upside how investors from around the globe can participate in deals that they qualify for, more straightforward, more automated. Entrepreneurs can quickly find the right investors for their specific projects, and fund managers can explore a new universe of options that are available for the first time for buying and selling different types of positions. Finally, real estate tokenization allows for the creation of entirely new products. In the same way that algorithmic trading revolutionized the stock market, tokenization is poised to revolutionize the way that trading is done in the real estate market. This revolution is centered around the ability to repeatably deploy low-cost deals and optimize portfolio diversification and investment returns. But how does this all play out? In the next section of this webinar, we'll provide some insight into materials we're actually going through with clients who are on their tokenization journeys right now. One of the questions that we get most frequently from clients is, how does tokenization actually represent a physical asset? The answer is fairly simple. Securities are administered via offerings that are prepared for the appropriate regulatory authority. There will be documentation relating to the incorporation of the entity. This defines how shares and ownership of the company are administered, who is eligible to be a member, etc. The terms of the offering, usually this is in a subscription agreement, and then any risks that are associated with it listed in a private placement memorandum. As well, there will also be regulatory filings for the specific type of offering. So think about like a Form D for Reg D issuances. So the process is no different for tokenization. The only thing that is different is that the securities are administered via tokens set up for secondary trading, fractionalization, etc. And as such, this means there's some additional, slightly different language for the operating agreement, the PPM, and the subscription agreement. So we work to help clients understand what types of language need to be added, when those get added, how those get added, and what the implications of those additions are. At a high level, we can break down the processes required for a real estate tokenization into a few key phases. So the first phase is going to be a planning phase. This is where we define project details, we design the token, so this includes the tokenomics, the vesting schedules, and so on, and then we get into the token deployment and configuration. Once we have that, we go into the implementation. So this includes things like fundraising and ongoing support and management of the tokenization. These phases, as we work through them, take about 10 weeks for the planning aspect of a tokenization. Fundraising is going to be dependent on investor interests and what the market is able to support. And then the ongoing support and management for a project is only going to take about a couple of weeks to administer. We typically advise that a real estate tokenization is going to take somewhere between 4 and 6 months, but this can vary based on client readiness. Some of these phases will necessarily be shorter or longer based on the amount of education that a client has to go through, based on the complexity of the deal that's involved. And so we generally start from this perspective of being situated to help in all of these different aspects. To that end of working to meet the needs of clients where they are now, we also have a number of different products that are available based on factors like whether a real estate asset is already owned or if the proceeds of a tokenization and token generation event are going to be used to finance the purchase of an asset. We'll also look at whether the tokenization is going to be done for a single asset or for multiple assets. And then we'll look at whether or not the deal is going to be repeatable or is intended to be functioning kind of like a franchise model sort of tokenization. And you can see the overview of all of those different types of tokenizations, how we've broken them out in the matrix below. So these different products produce a set of specific benefits that our clients have a lot of excitement about, and I'll run through the three key benefits here. So number one, real estate tokenization allows a lot of flexibility. So it's easier to cater to the demand of specific sectors of the market, especially as it's evolving. So for entrepreneurs, they're able to cater offerings more specifically to the global capital markets. For investors, it's easier for them to diversify their portfolios with new investments or unlock liquidity for existing investments. We've also got fully integrated compliance. So these features make the fractionalization of an asset a breeze. So entrepreneurs are able to launch their tokenized real estate projects with compatible legal, technical, and financial documentation. And then investors are able to seamlessly go through onboarding, seamlessly set up secondary trading, and get more out of their asset without having to deal with that illiquidity discount and actually gaining a liquidity premium from having their investments in those economic interests be so readily accessible to secondary trading. Finally, tokenization enables a degree of financial and operational velocity that is missing from traditional real estate. So our pathways for issuing projects makes it faster than ever to go from idea to launch and management. For entrepreneurs, they'll use Upside to streamline onboarding as an issuer and immediately tap into a global network of investors. For investors, they'll spend less time worrying about the technical mechanics of investing and more time actually investing in deals that suit the desired returns that they have. To that end, we're going to run through some generalized case studies that represent a lot of the interest and demand from the clients that we're working with and the prospective clients who we're doing business development with. So one type of transaction that is specifically suited to the macroeconomic context we're all facing is providing an alternative to lending. So in this example, Alice owns an industrial plant that is valued at $20 million and that's producing a return of around $350,000 a year. She wants to raise money for another industrial plant, but she owes $5 million on a loan that's about to be locked in to a high interest rate for about 10 years. Instead of traditional finance, Alice decides to tokenize the remaining balance of her loan. Alice raises $8 million through a combination of private placements and crowdfunding, pays off the loan, and then uses the remaining $3 million as down payment on a smaller industrial plant so she's able to continue scaling the operations of her business. Another type of transaction that we're seeing in real estate tokenization is situated to fundraising. So this is going to be pretty common where somebody comes in, they buy a property to transform it into, some asset that was not worth as much to one that's worth a lot more, and then capture the value of that increase. And so here, after the purchase of a building and after the refurbishment and refinance of that building, you can then pay back the investors quickly, easily, move on to the next deal. And tokenization allows you to sort of go through that wash, rinse, repeat process more easily, more predictably, more transparently because of the way that the technology is oriented around the real estate tokens. Finally, the last use case that is suited to real estate tokenization that we want to highlight is the fractionalization of economic interest in a property that is already owned or under management. So in this example, Charlie owns a portfolio of properties that includes 20 townhomes, 50 condo units, 10 single-family homes, 2 restaurants, and a bar. So with real estate tokenization, Charlie has a lot of opportunities that are available to him. He can tokenize the interests of the properties that are not performing as well as he wants, get those off his books, and take the money from those deals. He can tokenize interest in the portfolio itself and use the money that is generated through that as a way to rehabilitate the assets that are not performing as well as he wants them to be. I think what the crux of this webinar is intended to convey is that tokenization actually allows you to do a number of different things with any of these use cases. And so hopefully this has sparked some aspect of your imagination as to how you might be able to use tokenization for your project moving forward. Looking ahead at what's coming, there are some really interesting developments that are starting to emerge that can extend the efficiency and opportunity in real estate even further. Automated market maker is a term used to describe a function of decentralized exchanges that help programmatically match buyers and sellers of different pairs of assets. And this is very helpful with regards to secondary liquidity of assets, and even invites a whole new universe of what is possible, kind of far beyond what we have with legacy, a lot of legacy securities being traded over OTC desks and things like that. This development has really originated from the decentralized finance space, or DeFi space, and has been quite popular with utility tokens so far. And as security token exchanges and the marketplace for security tokens becomes more robust, I'm sure we'll quickly begin to see the trading of securities in these types of ways where that programmatical compliance is able to be enforced. So Buckminster Fuller refined this concept of composable architectures for physical spaces based on a set of parameters through geodesic domes. And now we have a really big opportunity with tokenization, and specifically with real estate tokenization, to begin to program the way that these structures might be tokenized according to their own parameters, achieving specific sets of goals, enabling new modular types of fund structures. So you could imagine a series of different projects that are tokenized. You know, those could be added into, those could be kind of combined into one fund. You know, then you could have a number of different projects that are associated with, you know, hey, we've got one fund, we've got another set of projects that are outside that. And so you can start to see how these different sets of projects and funds can be continually combined and even, you know, accumulated all the way into types of meta funds based on the way that structures are kind of growing or contracting. And I think that is going to be something that becomes increasingly useful as the demands of global commerce continue to increase the way that they have over the last 150, 200 years. So whether you're looking to tokenize an existing asset, an existing portfolio of assets, or want to use tokenization to finance the creation of a new real estate investment product, Upside is uniquely positioned to help you on your journey. And if you'd like to learn more, set up a time with our team to discuss real estate tokenization options. And with that, I'm going to hand it back to Ryan.
Thank you, Brian. We hope this has been a helpful presentation. It may have answered a lot of questions, but it may have also created more. We encourage you to visit our website, and specifically our content hub, The Ledger, where we have ebooks, webinars, and a number of blog posts, all dedicated to real-world asset tokenization and financial tokenization. And if at any time you would like to talk to anyone in the sales department to discuss a specific project, you can reach us at sales@upside.gg. In the comments, in the description section of this video, we'll also leave these exact links as well, so you can reach them directly. Thank you for joining us. Thank you, Brian, for all the great intel. And we look forward to seeing you at part 3 of our webinar tokenization series. Thanks.